Good afternoon, everybody. Welcome to our intensive EB-5 course, where we will discuss everything that you will need to know to embark on the journey for acquiring your green card through the EB-5 program. Hello, everybody. My name is Charles Raether. I'm the managing partner here at AmLaw Group, where for over 15, nearly 20 years now, we've been assisting people such as yourselves in making effective, comfortable, and convenient transitions to the U.S., or if you're already here in the U.S. in some other status, make your status a permanent one by acquiring a green card through the EB-5 program. Now, the program's been around a long time, and it's changed, its form. The rules have changed, the regs have changed, how they review petitions have changed. We're not going to get into all those legalistic details, although if those are things of concern to you, we can certainly discuss that later at some point. Today's focus, and the focus of this whole video series that you'll watch in several episodes, is to help you as a consumer, as an investor, help you and your family make the right decision with the EB-5 and be prepared for the process as best as you can so there's no unexpected surprises. We understand this is a very monumental decision for you and your family, investing $800,000 plus fees, plus lawyers' fees. It's a lot of money. Let's be honest about it. So I can understand our client's position when they want to make sure that not only A, is this the right decision for them, but B, there's no unexpected problems, issues that come up after they've started when it might be too late to make changes. So let's get started first with a little bit about what the EB-5 program is and what it consists of. You probably know the EB-5 program was created as a means to allow investors to invest in the U.S. economy, create jobs, and as a result acquire residency and ultimately citizenship in the U.S. The dollar amount has changed over the years. For a long time, $500,000 was the minimum amount. Now the minimum amount is $800,000. And there's two ways really of investing. You can invest through your own proprietary business, or you can invest through a project of a regional center. Statistically speaking, and this is true within our practice, and I think writ large with all EB-5 applicants, probably I think 97% of all applicants file through a regional center as opposed to doing their own business. And that's pretty consistent with our practicing clients. I would say for every 100 clients we have, maybe one or two invest in their own business, the rest go through a regional center. Going through a regional center is certainly more easy. It's certainly faster. But there is a price to it. There is a price. You have to pay them for their work, and usually that payment that's required from them is in the form of what's called an administrative fee. And in addition, you also pay with the lost opportunity costs, meaning you do not acquire, you don't receive the true market value of your investment. The return that regional centers are paying right now is maybe anywhere from 0.5% up to 5 or 6%, which I've seen projects that high. But if you want to get at the high end of the income range of 5-6%, you've got to keep your money in there for probably 7 or 8 years, if not longer. So most of our clients don't want to keep their money frozen for that long. So if you're looking at a 4 to 5 year investment term, on average, maybe going to get 1% per annum. It's significantly a lot less than if you had your own business and were developing your own business, presuming, of course, that your business is successful. And this is where the risk and reward balance and analysis comes into play. You would most likely make more money if you invested in your own business, but you're also more likely to lose your money as well, right? With any business, whether it's an EB-5 business, you start a restaurant or an IT company, there's a large upside, but there's also a big downside. And from our experience, the vast majority of our clients just don't want to mix those two items together in the same price, meaning they don't want to go after high levels of return and profits if it also makes a high level of risk that their status, themselves and their family is at risk. Because it's one thing if you lose, say, $800,000 in a bad venture. It's another thing if you lose $800,000 and on top of it, you don't have a green card and you have to pack up your family and go back home. So for that reason, and I think this is the primary reason, right, why the vast majority of people invest in regional center projects is because of the stability, right? Nobody's doing this to make a lot of money. There's other ways to make money. They're doing this to acquire residency in a stable and timely and predictable fashion. So I think that's primarily why the regional center route is most popular. And to be honest, if I were an investor, I would probably go that route too. Now, There's regional centers, and then there are regional centers. There is probably, I haven't checked lately, over 800 regional centers that are registered on USCIS's website. And the problem with the EB-5 program, I would say, is one of transparency. There's not a lot of easy ways to find out, what income, what's the track record, what's, where are the skeletons buried, for each regional center. There's just no ranking out there. There's no independent site that can give you independent advice. How we work with our clients, and I think it's a good added value that we provide for our clients, is that we help recommend, we help guide them in the investment process. Now, understand, we are not financial advisors. We are not business plan writers or economists, certainly not construction managers that we could say, hey, they've properly budgeted for these expenditures, with this hotel project. But we've been doing this for almost 20 years. We know what best practices are. We know what the best players are doing, what the terms they're offering, and how they structure these projects. So with that information in mind, as well as the fact that we're, of course, representing you on the immigration side of things, we can compare, apples to oranges and say, give information to our clients to say, hey, this is a little bit maybe safer than that. This, set of risks and rewards, and this has that. And it's up to the client to ultimately decide. I know many lawyers just categorically do not assist their clients the choice of the project and why they do that, but I think that's selling our clients short a little bit. If we're in this together to assist our clients, we're going to assist to our best abilities. Understanding, again, we are not financial advisors, we are immigration lawyers, and that's where the focus is of our expertise. But having said that, that just points to the importance of selecting a reliable regional center. And I'll have to say, all the regional centers that we work with, they've been doing this for over 10 years. Of course, we'll work with other regional centers, but the ones that we feel comfortable recommending are those that we've had long-standing relationships with, and we've seen how they've worked with our clients, and we feel comfortable how they do that. I mentioned earlier, so much is dependent on the regional center because they select the projects, they select the developers, and even if they don't control the developers, they're serving as a very important filter in terms of going through, I'm sure these regional centers review hundreds, if not thousands, of projects a year, and they only pick maybe, I don't know how many they do in a year, 10, 15, 20 maximum. So they're serving as eyes and ears of our clients in selecting those projects that they feel are most worthwhile. So in large part, we as well as our clients are relying on the regional centers in their due diligence process and their financial analysis of the projects and their selection of those developers and projects to go forward with, and then we in turn rely on those selections. The other thing about regional centers to keep in mind is besides doing some of that initial analysis and evaluation of projects, they also have an important role during the course of the project, its construction, and its eventual, the funds back. They, in theory, are to be protecting the interests of the investors. And some some regional centers are more aggressive, if you even want to say, in doing that than others. And so obviously we're also looking for regional centers that we know that will stick up for our investors if there is a potential problem or a conflict or some delays and stuff like that. So that's also important as well. Speaking with us, how can you get reliable, objective information about regional centers? I'll be honest, I do not know. There are companies out there that sometimes pretend to say they will evaluate, I shouldn't say pretend, they claim to evaluate projects, and I can't say I've stayed abreast of all of their service offerings, and I can't speak to the level and the quality of the analysis that they do, but from my experience, companies that pretend to do objective analysis, I feel that many times they themselves are entirely objective themselves and might be pushing towards certain projects that they might have certain interests in, or they might stand to benefit from that. So that is important. You want to make sure the numbers and the structure make sense, and there's protective mechanisms in there for investors. That's all important. But at the end of the day, a lot of this just comes down to reputation. How much you can really trust A, the developer to do what he says he's going to do, and B, trust the regional center to enforce those terms on the developer and not let him get off the hook if things start to go sideways or there start to be problems. And so those intangibles are just things you cannot assess just with a piece of paper. And I know that sounds not very data-driven, but Unfortunately, I think that's the reality. The reality is relying on the track record of the regional center that you're considering working with, looking at how many projects they've had, how many of those successful, how many had problems, and it's inevitable. Sooner or later, even the best regional centers have certain problems with certain projects at some point. And looking at their track record, it's just like finding a money manager. They have ups and downs, but if you look at a money manager's or a financial advisor's track record over the years, you can see, yeah, they've done quite well compared to everybody else. And so as a result of that, you can kind of rely on that record going forward. Again, keep in mind, there are no guarantees in EB-5. Things could go wrong, and that's of the law, that investors are not allowed to make investment in a project where the return is guaranteed and where the money is not at risk. The money always has to be at risk, but it does not have to be a risky investment. And so that's just something to keep in mind, that again, there's no guarantees. Nobody can guarantee you anything. They can provide guarantees in terms of loans. There's other protective mechanisms, and we'll discuss that a little bit in some of the other videos. But again, there can't be a hard and fast guarantee, on this date, we will guarantee you repayment of such and such. And this is where the reputation and the track record of the regional center really comes into play, because you can see those centers that over the course of 10, 15, maybe 20 years, how often did they return the funds back? How often did they return those funds back in a timely fashion? And that generally gives you a good understanding as to how they approach these projects. So in conclusion for this first part, I wanted to talk about what is AmLaw's role in all of this. Right, all this sounds, fine and good. Okay, find a good regional center. Look at their track record. What does AmLaw do in all this? In part, I mentioned that earlier. In how we set ourselves apart from other attorneys is, we go all in with our clients. We will protect them, defend their interests, and promote their interests to the best of our abilities. Again, we're not financial advisors, but we will work with our clients in helping to find a project that is acceptable and secure for them. We, of course, do all the immigration work as well, from the source of funds, et cetera, and we'll discuss that in a little bit later. And we develop a personal rapport with our clients. We treat them like family in part, because of we have vested interest in their outcome and how they will perform as well. We are not the largest firm out there. We are not the biggest in terms of volume, but actually we take that as a badge of honor, because we limit our clients to a certain amount to ensure that we can give them the personalized attention that they all deserve as they go forward with the EB-5 process.